There's a moment that doesn't get talked about much. You say no. No to the weekend trip. No to upgrading your apartment. No to splitting an expensive dinner bill without thinking about it. No to buying something just because everyone else is. And on the surface, it looks like maturity, discipline, responsibility, long-term thinking. But underneath, it can feel lonely. Not dramatically lonely, just slightly out of sync. Like you're moving at a different rhythm than the people around you. And that subtle friction is harder than most budgeting apps will ever admit. Financial discipline sounds powerful. In theory, save consistently, invest steadily, avoid unnecessary debt, delay gratification. But in real life, discipline often means opting out of spontaneous spending, opting out of certain lifestyles, opting out of conversations where money is treated casually, and opting out, even when it's intentional, can create distance. Because money isn't just transactional, it's social. It's woven into how we connect. When your friends decide to upgrade their cars or move into trendier neighborhoods, it's not just about vehicles or rent. It's about belonging, shared experiences, shared environments. When you choose not to follow, you're not just protecting your finances. You're stepping slightly outside the group norm, and humans are wired to feel that. We evolved to value alignment, to stay within the tribe. So even when you know you're making the rational decision, your nervous system registers the separation. That's where the loneliness comes from. There's also subtle exclusion, not always intentional, but real. When people assume you won't join because you're saving, when conversations revolve around purchases, you intentionally avoid it. When social plans increasingly require spending levels you're not comfortable with, no one may say you're different, but you feel it. And that feeling can trigger doubt. Am I being too strict? Am I missing out? Is the long term worth the short term distance? The cost of saying no isn't always financial. Sometimes it's emotional. You might feel left out of memories, left out of inside jokes, left out of the shared excitement of upgrading life visibly. And visible upgrades are celebrated. New house photos get applause. Luxury vacations get admiration. Debt-free balance sheets rarely trend in group chats. Quiet investing doesn't generate excitement, so disciplined choices often feel invisible, uncelebrated, private. There's another layer to this. When you start taking money seriously, you become more aware. You see trade-offs more clearly. You calculate opportunity cost automatically, and that awareness can create internal friction. While others spend freely, you're thinking about future returns. While others stretch their budget for experiences, you're evaluating long-term impact. It's not that you don't value fun, it's that you now see the ripple effects. And that perspective can create emotional distance from more impulsive environments. This is especially true in your 20s and 30s. When lifestyle inflation becomes a marker of progress, people upgrade as income rises. Bigger apartments, better restaurants, more travel. If you intentionally keep your lifestyle slightly below your income growth, you look conservative, even stagnant, when in reality, you're building assets quietly. But assets don't show, they accumulate. So from the outside, discipline can look like hesitation, and that misunderstanding can feel isolating. There's also identity tension. If your social circle bonds over consumption, shopping, dining, upgrading, and you shift toward investing and saving, your values start to diverge. Not completely, but subtly, and subtle divergence is enough to create space. You might stop relating to certain conversations. They might stop relating to your priorities. No one argues, but alignment shifts, and humans feel shifts quickly. The turning point is realizing that loneliness isn't a signal that you're wrong. It's a signal that you're early in prioritizing long-term stability, early in building margin, early in stepping slightly outside average behavior. Most people inflate lifestyle with income. Fewer people consistently convert income into assets. So discipline naturally narrows the room. But narrowing isn't necessarily loss. It's focus. It also helps to reframe what you're actually saying yes to. Every no has a yes behind it. No to excessive spending. Yes to flexibility. No to impulsive upgrades. Yes to optionality. No to short-term validation. Yes to long-term stability. When you anchor your decisions in what they create, not just what they restrict, the emotional weight shifts. You're not depriving yourself. You're designing your future. Practically, discipline doesn't require isolation. It requires boundaries. You can still participate socially, but intentionally. Budget for experiences that matter. Communicate honestly when something doesn't fit. Suggest alternatives that align with your values. True friends don't require financial self-sabotage for belonging. And if certain environments do, that's information, not failure. It's also important to find alignment elsewhere. Connect with people who value growth, who discuss investing as comfortably as dining spot, who understand delayed gratification. You don't need everyone around you to share your priorities, but having some alignment reduces friction. It normalizes long-term thinking, and normal feels less lonely than outlier. Over time, something else happens. As assets grow and optionality increases, the loneliness softens, not because you're superior, but because your stability creates confidence. You're no longer saying no from anxiety. You're saying no from clarity. And clarity feels different, calmer, less defensive, more grounded. The irony is that financial discipline, which can feel isolating in the short term, often creates more freedom in the long term. Freedom to leave environments that don't fit, freedom to take career risks, freedom to choose relationships based on values, not affordability. That freedom reduces loneliness in a deeper way because you're not constantly negotiating your boundaries. In the end, financial discipline feels lonely because it requires divergence. Divergence from average spending patterns, divergence from immediate gratification, divergence from visible validation, and divergence always carries friction. But friction isn't failure, it's resistance to a different path. If you're feeling that subtle isolation, it may simply mean you're building something quieter, something less visible, but more durable. You're trading short-term belonging for long-term stability, and that trade can feel heavy sometimes. But over time, stability attracts alignment, and alignment replaces loneliness with confidence. Not loud confidence, quiet confidence, the kind that doesn't need applause to continue, because you know exactly why you're saying no, and exactly what you're building instead. At first, saying no feels like stepping away from trips, away from upgrades, away from the rhythm everyone else seems to follow. But you're not falling behind, you're building ahead. While others chase visible wins, you're building invisible strength. Freedom doesn't trend, stability doesn't get applause. But one day, you notice something shift. You're no longer saying no from fear, you're saying it from clarity. And clarity is powerful. You're not missing out, you're early to freedom, early to margin, early to a life built on purpose. And that quiet confidence, it doesn't need validation, because you know exactly what you're building and exactly why it's worth it.